Hi, this is Dave with Market Trading Concepts. It's Saturday, April the 28th, closing out the week for Friday, April the 27th. I hope everybody had a good, profitable week in the market. It got a little bit crazy there around the Ben Bernanke and the FOMC stuff that came out. That was a tough day to trade, but other than that, I hope you all had a great trading week, productive week. And just a quick reminder before we start off the video. We have part 2 of technical analysis and chart reading coming up at our meetup tomorrow, Sunday the 29th. As of right now, we have about 15 people registered, and the event was the meetup is open to 15 people. We may open it up to a couple of more people. It's the only problem is it gets really tight here in the Market Trading Concepts office. In the trading floor facility with once you start getting more than 15 or so people in here, gets a little bit tough just to move around and socialize. So we've limited the event as of now to 15 people, but once we get set up a little bit later today, we'll know exactly how many people we can fit. And if you're interested, just join the waiting list, and if a few spots open up, you'll be notified automatically. So we hope to see you all out there, and we look forward to that event tomorrow. Starts at 11 o'clock, runs till about 2 o'clock. Look forward to seeing you there. Okay, let's dive into the markets by starting out with the Dow Futures, as is usual. So what we were saying last week is we had this sort of wedge forming here, which we've delineated with this red trend line from the tops and this green trend line from the lows. And then I was looking, if I recall correctly, I was looking for a breakout to the high side. Now you had this move here, okay? You had this move here that pushed through the bottom of this wedge, and probably my best guess is I wasn't looking to short this unless it was on an intraday basis. I was probably looking at the short side there on this day, intraday, if the charts were in my favor. But from a swing trading basis, I wasn't really interested in this because it was against the major trend, and I had a bias in my mind, as I mentioned in last week's video, saying, look, I'm looking for higher prices here. I think we're going to push higher, and if we come back, if we push lower, I'm not really interested until we get some decent downside action below this level here. This was really the actionable level below 12,652 on a swing basis, on a swing trading basis. So this day here, let me just clear this off again. This day here would have provided good intraday trading, but from a swing basis, not interested, okay? So then what we had was probably the shorts getting suckered, okay? So the shorts getting suckered in over here. It hit support at this level, 12,800, which if you've been watching the videos, it's been on the chart here for quite a while. Came back down here, tested support. You can see it got accumulated back up, okay? And then it broke through, this price action was getting tighter and tighter, and then it broke through the high side. Now, on this particular day here, I was looking at this level. This was a key level to me that I identified on this day here. This was the heads up that we were breaking through on, that would have been Wednesday. Okay, this day would have been Monday. So you've got Monday, Tuesday, Wednesday, Thursday, and I apologize, I'm not really good with dates and things like that. Once the day is passed, it's happened in my mind and I forget about it. So just kind of jumping back here. So on Monday was kind of the fake out. On Wednesday, it gave me an idea that the market was doing what I was expecting it to do, go higher. So then I was watching very carefully, or I was trying to watch very carefully on Thursday, okay, Thursday here, as it broke out of this key 13,091 level. So as it broke through these highs, okay, I actually had an intraday signal that printed here, and I missed that trade. I actually missed that trade, and there was a nice run as it broke through. It was a breakout momentum trade that I was looking at intraday, And I just missed it because I was, talking to some of the guys here in the facility, and I was hesitant to buy the high, hoping it would go higher. So I just kind of let it go by there, but it was a nice trade. It would have been a nice trade right there. So no big deal. It happens. You look for the next opportunity. But what I was really looking at here was this breakout at 13,091 to confirm some strength to the high side. And then what I wanted to see here, this was a really good confirmation for me when it came back. And you can see overnight it actually tested this level almost to the tick, 13,091. I think it came 10 ticks lower, but I mean almost to the tick. And then it held that level and it pushed higher. And now, as you can see, we closed with a doji on Friday. So we're doji at the end of the day Friday, but as far as I'm concerned, it held this level, 13,091, and I'm interested in long side trades above this level at this point in time. Now, the next challenge point, or the next decision point, will be 13,242. This is the major resistance that we need to get above in order to get some real movement to the high side. Okay, so this is the kind of heads up that we're going higher here. And this is really the level that we need to break, 13,242. So it'll be interesting going into next week to see what happens. And in terms of an execution, on a swing trading basis, what I'd be looking at is I'd like to see this 21 period moving average start rolling higher. And I'd like to see it come above this level, and then I would like to see a pullback to this level, hold, push through resistance. That's what I'm really looking for going into next week in the Dow Futures. Okay, let's have a look at the same market. Let's look at the Dow Futures, but from the Darvas squeeze perspective. I'm going to start with usually I take a top-down approach. I'm going to look at the weekly chart here. Now, the weekly chart here, you can see a couple of things going on here. Basically, what you have here, this is a warning sign to me. This potential crossover here on the MACD is a bit of a warning sign to me. When I see a red Hakanashi here, and I see the MACD looking like it wants to roll over close to the top of its the top of its oscillator range. That's a bit of a red flag to me, but as you can see here, we have these levels that have been on our chart for a while, and you also now have a Darvas box forming here. So what I'd really like to see is some direction out of that Darvas box, and what you can really see here is this situation coming into play where this resistance 13,240, I think we have it pegged at 242 on our other chart. It's within 2 ticks. It's good enough. This is now, on the weekly chart showing the major resistance level as well. You can see these price highs, this Darvas box coming in at these price highs. So it would really be nice to see direction outside of that Darvas box. It'd be nice for a squeeze to come into play here, and to get, a fresh Darvas squeeze through the high side to get some higher movement. That way you'll get some fresh volatility coming into play. But this MACD, I'm not sure how this MACD is going to resolve itself. Now, indicators are great to use, but they're just that. They're indicators of where price is going. So, and this is something we're going to talk about at the meetup this weekend. Price is always king. Price is always number one. Price is going to go where price wants to go. The indicators just give you indications. So from that perspective, I'm looking to see what price is going to do and look for guidance to see if we're going to break this major resistance on the weekly chart. Now, that said, let's have a look at the daily chart, because I think the daily chart's a little bit more telling and it's a little bit more interesting. So I'm just going to expand the daily Darvas squeeze chart out here. And we're going to look at a couple of things here. The first is we had these fibs drawn. Okay, we had these fibs drawn from the highs to the lows. Okay, so these levels aren't exact. It's hard to throw them on here exactly, but here's the high, here's the low. Okay, so here's the high, here's the low, and we had a 50% retracement in this area. And last week we talked about this area as kind of a no action zone, but you want to see if you get above it. If you get above this level, good indication you're going to be long. And I mean by above it, I mean a decisive break of that level. As you can see here, let me just zoom in here. Okay. Let's zoom in a little bit here so that we can get a better look. So if you look at this level in here, you can see this this zone here. Okay. And you can see a break above this zone nicely. And then you can see this bar broke above it, and then this bar broke above it nicely. And I think we have that level in there, which I should probably draw at the 13,091 level. Okay? So now we're holding that level high and tight with the doji on the day. So as you can see there, this level got really congested in between this retracement, and you can see the first test of it, the first test of this 50% retracement from the high to the low came in here, and it actually got rejected fairly hard on this day. Okay, but then what it ended up doing was it put in a bit of a higher low here, and then it pushed up and it tested the 61.8% retracement. Okay, and it struggled in this area for a bit, and it looked like it was going to sell off in this day here. It looked like it was going to sell off, but I wasn't really interested unless we had a move below this level here. Okay, and then it broke through this level here. You can see how it clearly broke through this 61.8% retracement, and now it's to the high side. So everything looks the same as our analysis on the other chart. You actually have a break above this Darvis box now on the daily chart, but you don't have a fresh squeeze coming into play, so I'm not expecting as much movement unless we really break these highs. So that's really the next actionable area, is a break of those highs, and to see that it's going to hold and put in, intermediate new highs, which I think would be, from the perspective of the last year or so, all-time highs. That's not the right terminology, but it's not the high highs, but they would be the intermediate highs. They would be new highs in a long time. Let's just put it that way, for lack of a better technical term. So you can see the MACD is providing support at the zero line. This is something that we'll talk about briefly at the meetup this weekend as well. Tomorrow is, the MACD can be used as a kind of a support and resistance area too, where you see the MACD is coming here and it's going sideways, but it's holding support at its zero line. So that's very interesting. And then you can see my trending indicator looks like it wants to push higher. The Hakanashis look like they want to go higher. They're blue. Everything looks good. We just need to see a break of this level, these highs here, 13,240 to 248. Okay, so I think everything makes sense to look for higher prices unless we get up into these levels and we fail these levels. This is the major resistance. So let's take a look at the sister indexes and see what they're saying, if they're corroborating, if they're indifferent, or if they're just not telling us anything. Okay, so looking at the S&P futures, the ES contract, you basically have the same story here. You have now you've got an 8 and 21 crossover of the 8 EMA is greater than the 21 EMA, which is a good sign for going higher. You've got support at the MACD zero line here. Now, what you don't really have, like this market is not as strong. Not that you don't have anything, but this market doesn't look as strong on the weekly basis here as the Dow Futures. But everything else looks pretty good. I'm a little bit concerned about this, potential divergence. If the market pushes higher and the MACD rolls lower, then I'm going to be looking at that as a potential divergence, and I would be cautious to the high side at that point in time, and just maybe look for a blow off, like stop run, and then I would want to see this roll back to the high side and confirm as well. And I'd want to see this momentum picking up to the high side as well. So interesting place to be in. At this point in time, the S&P futures are kind of corroborating the story of the Dow futures, and you've got a break of this trend line. Everything looks pretty good for for a potential reversal. I'm not going to do the fib analysis or anything, but it looks like it cleared the 61.8% retracement. So going into next week, we'll be looking for the same situation as what we're expecting in the Dow. Okay, looking at the NASDAQ futures, it looks pretty much the same. The NASDAQ futures look a little bit weaker in terms of where the price action is relative to its recent highs. But the NASDAQ, you had a break of this trend line here. You're above the 21 EMA. You're above the 21 EMA. You're holding support at the MACD 0 line at this point in time. This doesn't look as divergy, if that's it's not really a technical term, but it doesn't look as divergy as the other as the MACD on the other charts. This looks pretty good. I mean, this looks this is corroborating the story in the other indexes at this point in time. Looks good. Okay, now this is what I want to see. This is exactly what I want to see. I'm looking at the transports here, and the transports are. The reason why I say this is what I want to see is because the transports are setting up a squeeze on the daily chart. They're setting up a squeeze on the weekly chart. So we have a potential Darvas squeeze situation come into play on the weekly, even though we're in the middle of the range and we're sort of doji on the week. But on the daily chart, we're kind of in the same situation. But what I'm expecting to have happen here, you see this is holding the 0 line on the MACD. This looks like it wants to cross to the low side, so that's a bit of a question mark. But what I'm really looking at here is I want to see some kind of a return to volatility or a return to movement, okay, here in the as a heads up in the squeeze. But I want to see some direction outside of this Darvas box range, okay, one way or the other, to get an idea of where this wants to go. If it breaks the bottom of this Darvas box while it's in a squeeze, or the top of this Darvas box while it's in a squeeze, and we get a Darvas squeeze kick in, that's going to be very telling on the daily or the weekly chart where we're going. I'd prefer, obviously, to corroborate my long bias, I'd prefer a break to the high side. But if it breaks to the low side, I'll be very, very, very cautious on taking any longs, because I would like to, from a Dow theory perspective, I would like to see the transports either corroborate or lead. If they lead at this point in time, that's great, because it will give us a heads up that the indexes are going higher, and would feel more comfortable about swing long positions in the indexes. Let's take a quick look at the bonds. When I look at the bonds, I've got nothing on the bonds, and the reason why is they look higher. But to me, this looks like, as I've mentioned in previous videos, this looks like some big forces at work that are pushing these things higher. You've got indications that it wants to go higher. You have a potential Darvas squeeze on the weekly chart, that wants to fire off on the 5-year, which is huge. It's potentially a huge move. But what I don't like about this, first of all, I don't like that I feel that the move is really not a market-driven move. It feels more like, for lack of a better word, governmental manipulation, or I don't even know what the word I'm looking for is, but it just doesn't feel like a real move. Now, wherever the price goes, it is a real move, but I'm not interested in really participating in it, because fundamentally, not that I'm a fundamental trader, but it really doesn't make sense that it wants to push higher. I think interest rates, it makes sense for interest rates to go higher and not to stay at these artificially all-time lows. So these artificial all-time lows are a little bit concerning to me, because I feel that they're not sustainable. I'm not going to fight the price action, obviously, but you see this MACD here. This is a major divergence. Like, if you look at this MACD on the weekly chart, the price is going higher, the MACD is going lower. Okay, now it could cross over and come up to the high side here, but even like the momentum on my trending indicator is going lower, even though price is approaching these highs. I just don't like it. I don't like fundamentally what's going on. I feel like, I almost feel like, if you see somebody that, that has, let's say, a lot of credit card debt, and they just keep trying to work their way out of that hole, I kind of feel like that's a situation that bonds is reflecting in the economy, and I don't really like it. So I think that at some point this is going to break, and I think we're going to see bonds lower, and we're going to see interest rates higher. That's been my bias. Now, from a technical perspective, I'm not going to fight it, but I just don't really want to participate either because I don't really like what I'm seeing. Hope that makes sense. Okay, so let's take a look at the 10-year, and the 10-year is the same situation. Like if you look at it, it just fired a Darvis squeeze long on the weekly chart, which is a big signal. I mean, you've got potential to move substantially higher when you see a signal like this come in. However, look at the MACD here diverging. This could roll to the high side, but at this point in time, you're approaching new highs, you're breaking through new highs, and the MACD is rolling lower. Your momentum on your trending indicator is rolling lower. To me, that is a major divergence. I really don't like it. This looks like it wants to roll over. It's like in the top of its oscillator range. It looks like it wants to roll lower on the daily chart. It's not to say price won't go higher. Not to say price won't go higher in the 10-year, but I just don't like the divergence, and I don't really like. I really don't want to participate in that move because I don't think it is sustainable. Not to say that the markets, can't stay irrational for longer than we can stay solvent, as the saying goes, but when something doesn't make sense to you and you mentally just can't get on board with it, there's nothing wrong with just stepping back, leaving it alone, and watching how it unfolds. If you look at this daily bar here, at least in the short term, how it closed, substantially off of its highs, this is a potential signal of at least a pullback into support. So that's what I would be, kind of looking for. It broke through the high here on the weekly. It could just, probe it, pull back and potentially move higher, or it could roll over. At this point, you don't really know, but I definitely will not be participating in that. Okay, so having a look at the 30-year just to round things off here. So we had on the 10-year, we had a Darvis long on the weekly chart, okay, as we saw on the chart as well, and in my radar screen indicator here. If you look at the 30-year, the 30-year on the 30-year on the weekly chart, what you can see here is the same kind of situation. You've got long indications here. You're going to return to volatility. You're approaching the highs. You're doji on the week, but you've got this divergence here in the MACD, and I feel you have this divergence here as well. So if we hit new highs and you've got a lower high here in this indicator, and you've got this divergence in the MACD, to me that is a red flag. And if you look at the daily chart, same situation here, a heads up potential pullback. So they're all corroborating the same story to me, and what they're corroborating I'm not really liking, and I think this is a major warning sign. If you are trading the bonds, just be aware that there is a potential divergence setting up, and what you want to be careful of is some kind of a blow-off extension to the high side and then a rollover. So just be aware that there are some divergences going on in that market, and just be careful. Okay, let's have a look at a couple of key stocks, starting with we'll look at like Google and Apple. Google looks to me like it's weaker than the market. It's weaker than the market. It's definitely not. To me, it looks weaker than the market in general, based on the charts that we looked at earlier with the stock index futures, it's kind of not surprising because the Nasdaq in itself, which Google trades on, you can see here Google trades on the Nasdaq. The Nasdaq's a little bit weaker than the Dow and the ES from a chart perspective. in relation to where the price is in relation to its current highs. So if you look at this, it's still red Hakanashi's on the week. You had a short squeeze fire here. You're in the middle of a weekly Darvis box, somewhere in the middle of the range, which doesn't really give you a lot of direction. The MACD has kind of rolled over to the rolled lower, but it is still above its zero line. You've got this kind of action happening here in the trending indicator. You had this short squeeze fire here, which was a Darvish short here at, looks like 694.54, and it hit its target, and as I would expect, you found support right where it hit its target on a one-to-one basis of this Darvis box. So this Darvis squeeze resolved itself to the downside, hit its target, and now that move is over. You're kind of in a mixed situation here because you're below the zero line on the daily chart. You're below the zero line on the MACD on the daily chart. You're at resistance. You're actually stuck in this this kill zone between the 8 and the 21 EMA on the daily chart. You really need direction out of that range. You want to see if it's going to push lower or push higher. So this would be a tough place to be. I wouldn't necessarily want to be short this, although this is a decent short setup on the daily chart, but I wouldn't want to necessarily be short this just because the indexes to me look like they want to go higher. Now, if the indexes fail to get through that major resistance, then this could turn into a good short play. But at this point in time, I mean, you're at resistance here. You're kind of at resistance here on the weekly chart. I really would probably wait to see some kind of guidance out of this area to decide what to do. You could almost box that area and say, okay, if it breaks higher, go with it. If it breaks lower, go with it. Although I'd have a hard time going long on this stock when my trending indicator is negative. So I'd probably just leave this alone, but it's interesting to see what a key stock like Google is doing at this point in time. You've kind of got, this trend line coming into play here. And this is another kind of warning sign to me. You have this the swing high, right? You have this higher high, and you have this higher low at this swing point. You have a higher low here. So, I mean, is it going to be a situation where you do one of these? Or is it going to be a situation where you kind of break above this, pull back, and push higher? I think you really need guidance from the indexes as well, and guidance out of this area to see where it's going to go. I wouldn't be too excited on jumping into this when it's in the middle of this range and at resistance, and betting. It's kind of a 50-50. Might as well just toss a coin. You don't really know where that's going to go. You have no advantage in that trade. And let's take a look at Apple, which seems to be the crowd favorite here, right? So here we have a situation where on the weekly we're holding the 8 EMA. Okay, we're holding the 8 EMA, and we seem to be trying to push higher on the weekly chart. On the daily chart, it's very sloppy on the daily chart. You have, I guess this was into earnings. You had this, it looked like Apple was going to collapse, and it was, going down, 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 down. All of a sudden, earnings come out, boom, gap up. And now you're above the 21 exponential moving average on the daily chart. This chart to me looks really sloppy. This, I wouldn't know how to trade this. Like if you said to me you have to trade this, and what would you do? Excuse me, I would say nothing. Keep your money in your pocket. This could go either way. You're in the middle of this Darvis box with some obvious volatility here, with these gaps and things like this. If this breaks the 21 EMA decisively, it's probably going to come down and retest the bottom of this, close this gap. So at this point in time, you've got the MACD is lower, but it's holding support at its zero line. You're losing momentum here on the daily chart. You haven't lost too much on the weekly chart. It's really it's really sloppy. I mean, unless you're trading it intraday and you're looking at 5-minute to 60-minute charts, I really wouldn't want to hazard a guess at where this is going to go next. Is it going to push higher? Is it going to push lower? Who knows? Okay, let's have a look at the dollar index, which seems to be, driving a lot of markets. And if we look at the dollar index, to me it looks more negative than positive. Why does it look more negative than positive? Okay, you've got this, even though the weekly chart, the the trending indicator is positive, basically what you have is you've got this crossover here in the MACD on the weekly chart going lower, and you have this kind of consolidation action, can't get through this trend line, and now it looks like it's pushed through this trend line. Now it looks like it wants to push through, it's going to at least test this trend line, and you've got this Darvis box coming into play. You have a potential Darvis squeeze coming into play on the weekly chart, and everything is sort of setting up to see a failure of this level around, what is that, 78? Okay, I just paused the video there. I wanted to draw a line at this level here because it seems to be a pretty key level. Let's expand out the weekly chart and look at this. Now, you've got this level around 78.10, which appears to be a pretty key level. That level comes into play on these lows, the bottom of this Darvis box. So if you break this Darvis box and you fire a Darvis squeeze, you're probably going to get some significant downside, at least probably somewhere down here, okay, just below 77, or to retest this level here. That's a pretty straight line by hand, just below 75 at these lows. So a Darvis squeeze coming into play would probably bring you either down here or even potentially all the way down here. Down here would be about a one-to-one movement of that Darvis box there. Okay, so that is not impossible, but we would really need to see a clean break of this level. Okay, it's not going to happen overnight, but we need to see a clean break of this 78.10 level. If we hold this and we actually reverse and push higher, and this turns into like a long squeeze, then I would be looking to retest these highs at a minimum. So you're in a tough spot here because it looks like you've got weakness coming in, but you're not below the zero line on the MACD, even though you're losing momentum. So you'd really need to see more confirmation of this move. But just looking at it by eye, it looks more negative than it does positive at this point in time. Okay, let's take a look at the daily chart of the dollar index. Now, if you look at the daily chart, what you're seeing here is, you had this kind of wedge coming into play where the price was, the theme last week was the price is getting tighter and tighter and tighter, and it can't stay this way forever, right? So now what you have is this situation where you have, let me just expand this out a little bit, just zoom in a little bit and clear this off. Let me just reposition this, and you can see this tight price action here and this wedge that came into play has kind of broken through the bottom, and it's come back up, tested this trend line, and now it looks like it wants to push lower, and it closed right at the bottom of its range on the day on Friday. That's pretty negative. That's a negative close, at least on the week on Friday. So now you can see you've got red Hakanashis coming into play. You have a short squeeze coming into play. The MACD is rolling below the zero line now. You see that on the MACD? It's rolling below the zero line. It was hugging it for a while there. You can see the crossover, and now it's rolling lower, and it looks like it wants to pick up in the direction on the low side. Your trending, the trending indicator has rolled lower. So this is looking across the board pretty negative. It's looking pretty negative on the daily chart. Now you have support coming in down here. Again, those two levels are coming into play on the weekly. We saw that $78.10 on the weekly chart. Now you can see a confluence on the daily chart of this level here. So I would expect it to at least come down and test this somewhere in this area. That's what it looks like That's what it looks like it wants to do. From there, we'll kind of have to see. We'll have to see if we're going to get a break of that Darvis box there, a clean break of it, and if we want to go lower. I think it's unrealistic at this point in time to try to project beyond that. Of course, this could even be a fake out like we had on the stock indexes, where it kind of broke through and then it popped higher out of the wedge. But when I actually see this kind of action coming into play, where we were in an elongated squeeze and then it fires, and then this is rolling lower and this is rolling lower, this to me tells me it's more of a real move, not a fake out, but more of a, you've got some confirmations in your indicators where it looks like it wants to follow through. Let's say that it looks like it wants to follow through. So I think we're going to test somewhere around this key $78 level, 78.10, and then from there we'll see where we go. Okay, and now that we've looked at the dollar index, we have to look at the euro. So let's have a look at the euro and see what the euro is telling us. Now, if we look at the euro on the weekly chart, you can see here, as we mentioned last week, it fired an initial Darvis squeeze short on the weekly chart, but it was really just a probe. When something like this happens, you need to see a follow through. So you need to see it, cleanly break that level, right? And you have a lot of potential downside when it does. So you don't have to, just place, an entry right at the low there just to get sucked into the trade. You want to see it actually show weakness below that level. You've got 400 potential ticks of downside. I think we're looking at let's see what we were looking at, a potential move to 126.44 if it followed through. So this is an interesting signal in itself. It did not follow through. So when you see something like this happen where you had a test, of this level, which was the key level, the Darvis box, and it did not follow through, and it actually pushed higher, and now it's coming above this trend line. Now you've still got resistance overhead here, and it is in the middle of this Darvis box range. But if you see here, you still got red Hakinashis. Now you're in the squeeze here, and momentum's building to the high side. The MACD is rolled over, So this was obviously overdone in its oscillator range to the downside. You're at least getting a bounce. You're still below the zero line, and this is still negative. But if you look at the daily chart, it's a little bit more constructive to the high side, where you're getting a bit of a turnaround here where the Hakinashis are blue. Now you're in a squeeze. If you look at the daily chart, you've actually fired a Darvis long. So the criteria that I have for a Darvis squeeze long is that you're in a squeeze and you've broken the top of the Darvis box. So if you see this situation come into play, now you're above the 21 exponential moving average, you're above the 8. The 8 and the 21 have crossed over, right? So the 8 EMA is greater than the 21 EMA. And then you also have the MACD is rolled higher, even though it's below its zero line. And now the trending indicator is rolled to the high side. So what you really have here is a mixed situation where it looks like, the euro is not ready to give up the ghost at the $1.30 level, and we could just get a lot of bouncing around in this range for an extended period of time. We're always expecting a trend to form. But what you're looking at now is once I see this come into play on the daily chart, I think we're probably going to come up and retest the higher end of this range. So somewhere up in these levels here, and we'll just throw a line on there just to see where we're at there. So let's see here. Drawing. I really should put shortcuts on here. We need a horizontal line right at the top there. And we need to, so we have a level here at these highs of about $1.3391. So $1.3391 would take us on the weekly chart probably to those highs. Let's just draw a line on the weekly chart and see if if it makes sense. Let's just go to these highs. $1.3374. The highs are So we're looking around these highs here. So I'm just going to mark both of these levels on both charts. because those levels look like they are in play for a retest. So when I look at, the preponderance of evidence here with this Darvas squeeze coming into play, and then you have, the squeeze is going to give you the volatility, the return to volatility that you need to get some movement, and you look at the width of this box here, and you project it out, kind of comes into play here. It's about the width of that box from here, okay, to there. So I think what we're going to get is a retest of those highs, and then we'll have to see. So when I look at the evidence more and more, and I compare what I'm seeing in the euro to what I'm seeing in the dollar index, I think the conclusion that I'm coming to is that we're probably going to get a retest of this level, 133.91, right, which would probably coincide with a level of $78, a test of 78 to 78.10 to the downside in the dollar index, okay, because these two move opposite each other. They're almost the exact inverse of each other. So I think that, that kind of corroborates with both currencies. I think that makes a lot of sense, and I think that's probably what we're looking at. We need to get through this immediate resistance here in order for that to kind of follow through. But once we get through that resistance here, I think this is just the pull of the tides. That's just a magnet right there in my mind. So I'll be looking for that in the currencies. These aren't really clean setups, but this is what the market's giving us right now, and I think that's what's going to happen. Okay, let's have a look at the Australian dollar. So the Australian dollar is kind of interesting here. We found support on the weekly chart in and around this area. We tried at one point to buy this breakout here, and we're in the profit going back several weeks now, and then we ended up getting stopped out of this position. So I've been a little bit cautious on the Australian dollar from that point forward, because it really wasn't giving a clear indication of where it wanted to go. You can see this kind of trend line coming into play here, where you have support at this Darvas box and at this kind of trend line here. If you look at that's the weekly chart, this still looks negative, but everything, this is still net positive on the weekly chart. You'd want to see this turn, from red to back to blue. But if you look at the daily chart, what you have is this kind of downtrend coming into play. And I'm just going to expand this chart out just to get a clearer idea, because I think this is more, the daily chart's a little more telling. So if you look at the daily chart, you have, this series of lower highs and lower lows, right? And then now you have this Darvas, you went sideways, and it didn't seem to want to go any lower. You almost hit this target to the downside here that was that fired from the break of this Darvas squeeze here. Okay, you almost hit that target, at least 75% of it. That's good enough. And then you have this kind of, it's not a clean double bottom, but you have this come up here, the break of this trend line, the break of this downtrend line, which is a cautionary sign that you don't really want to be short anymore. And then you can see it kind of went sideways and this Darvas box formed here, but it's been hugging this downtrend line. It hasn't broken it to the downside cleanly. You can see these tails have kind of been probing below it, and now it looks like it wants to push up back to the high side. So if you look at this, what you can see now is you have the beginnings of an 821 crossover, okay? An 821 crossover, and then you have a Darvas squeeze. I'd consider this more a Darvas squeeze reversal signal, because you're reversing out of a minor downtrend. But it is a Darvas squeeze long signal firing with blue Hakanashis. You're still in a squeeze. The MACD is rolling higher, but you're still negative here. You're still negative here on your trending indicator, but you can see here it looks like it wants to push to the high side, and that's what you'd want to see. So at this point in time, this looks like a potential Darvas squeeze reversal with a potential target of 106.13. Now these are higher risk trades than trading a Darvas squeeze in the direction of a trend, but this is actually, if you really consider this is a resumption of this trend back here, okay, where you probably had a 50% retracement here. Now we can take a look at that for analysis sake, but from the low to the high in that area, 50% retracement of that. But this to me looks like a fairly decent signal if you can get some a little bit more confirmation. Maybe not necessarily just buy the breakout, but wait for this to roll higher, buy a pullback, and then look for a target around this area. That looks interesting. It could even potentially retest these highs. But this, somewhere in here or somewhere at this full target looks like an interesting, a potentially interesting trade. Now I'm just going to pause the video and throw some fibs on here and see if where this support came in from a fib perspective. Okay, so let's have a look at this. If you look at this from, and I apologize, it's a little bit messy, but if you look at it from these lows, let me just mark this, from these lows, okay, these lows to these highs up in here, you have here's your major trend basically. Here was your major trend, and this is why I originally had a long side bias in the Aussie dollar. And then you had this retracement all the way down to here. You can see it hit that 50% level, okay? It hit that 50% level, and it did not close below the 61.8% level. It actually didn't even touch it. That target from the Darvas squeeze was kind of lining up with that 61.8% level. So it looked like from this low to this high, this 50% retracement, it looks like it held, and now you have a Darvas squeeze signal firing out of the consolidation of that level. So I would expect that this level will probably hold, okay, and that will probably hit somewhere in around that target. That's what I'm expecting anyways. It looks interesting. Okay, let's have a look at the British pound now. My chart's just refreshing here. So the British pound looks really interesting. We've been kind of talking about it on and off for a while now about, going back several weeks, that the British pound weeks and weeks ago, it broke this downtrend line and it was just kind of going sideways. It was really not actionable at that point in time, but we had the MACD crossing to the high side. We were in a squeeze here. We were in a squeeze here. Hakanashis were blue. Trend rolled to the high side on the weekly chart, right? And then what you have here now is, here you had a Darvas squeeze long on the weekly chart form at 161.23 is where the signal fired. Okay, the break of this Darvas box here, this Darvas squeeze came into play. We had a heads up on it on our Darvas squeeze radar screen, and it has a potential target on the weekly chart of, just bear with me here, it has a potential target, now this is a pretty lofty target, of 171, around 171. Now you have obvious immediate resistance at those price highs here, right, which come in at 165.62, I believe. 160, yep, just under 166. So that's a couple hundred ticks away. So that is definitely actionable. Now what I really like about this is, we've been consolidating for a long time, and let me just grab a pen here. I don't know why I'm using blue here, but it's an interesting color here. Okay, so we have this kind of higher low in place, right? And we've kind of got this stair stepping going on. But what's really interesting is I'm going to expand out the daily chart. So you see this situation here where you have a Darvas squeeze that fired on the weekly chart, right? Now, if you look at the daily chart, and these are some of the best trades usually when they set up, if you're paying attention and you catch them, you have this situation here on the daily chart where you had a confluence from the daily and the weekly in the Darvas squeeze setup. So here you had a long signal at 160.57 on the daily chart and a target of 163.18, and for all intents and purposes, you've just about hit that target. So that's a pretty interesting, an interesting confluence, and that's something that you can use the weekly chart and the daily chart in conjunction with each other, and when you see those two setups come into play around the same levels and they're confirming each other, that confluence really gives you the confidence to take these trades. Those are usually the best trades when they come together, and I just know that from experience. Now, if I look at the daily chart here, we had blue Hakanashis, we had the Darvish squeeze fire here, everything coming into play. The MACD was above the zero line; it had crossed higher. The trend was in our favor here. So this is an interesting trade. Now, would I want to buy it here, hoping it's going to go higher? No. I think the opportunity here is to recognize that you have potential room to move higher on the weekly chart, recognizing those potential targets there, several hundred ticks higher, but wait for the next clean pullback down to, let's say the 21 exponential moving average. So if I were watching this from a swing trading basis, what I would say is, okay, here you've got a lot of days above the 21 exponential moving average. You have room to the upside on the weekly chart. It's always great to trade in the direction of the weekly chart because that's where the bigger pressures are. So what I'd be looking for is maybe, once it hits this target, a pullback down to the 21 exponential moving average. Let it come close or let it hit the 21. It doesn't necessarily have to hit the 21, but you want a decent sell-off so that you get close to that level. Then what you can do is you can look at, a 5-minute chart, 15-minute chart, all the way up to a 60-minute chart, and wait for one of these charts to trigger. So everything's going to look negative intraday when this situation happens. But then what you want to see happen is you get the pullback, the level that you're interested in, and then you want to see, let's say, this roll to the high side and put in a higher low. On the 5-minute chart, use that as a trigger, get into the trade, place your stop below, the lows or just below the 21 exponential moving average on the daily chart, knowing that your risk to reward is in line, and that you're going to probably get continuation and a bounce to some of those higher levels, at least to these highs. In this case, I would look for a bounce to at least these highs, or to break those highs and to move to some of those weekly targets. And again, some of those weekly targets could be, some of those weekly targets are, they're substantially higher, 165, 62. Could even get in front of that 165 even. That's over 300 ticks away. So buying a reasonable pullback on the daily chart and looking for, that to set up, I think that would be a decent swing trade, and I'll actually be looking at that myself because the British pound has had a lot of time to kind of consolidate and build up energy for this move. And everything looks good on the daily chart and the weekly chart. I like that alignment. I like that confluence. It looks pretty awesome. Okay, let's take a look at the loonie here. You can see we're having the same situation coming into play here on the weekly chart and the daily chart. The loonie, the Canadian dollar has been consolidating for weeks, and I said I didn't really like it because it was just stuck in this range here. Now, as soon as you figure out that, hey, look at that, it's consolidating, I can trade it. I can trade it in this range. Boom, it breaks out. And this is why I like trend trading better, and I don't like ping-ponging these ranges, because the one time where you expect it to hold this, it's just going to break out and run on you. So you can see here the Canadian dollar is net positive on the weekly chart. Okay, it's above the zero line here. Okay, everything is net positive on the weekly chart, and now you're getting more of a follow through of this signal that took place, 1, 2, 3, 4, 5, 6, 7, 8 weeks ago. I mean, that's 2 months ago. So it's just been consolidating for a long time, but it looks like it's ready now to push a little bit higher. We're seeing weakness in the U.S. dollar. I think we're going to hit $1.08 where this target is. I don't know. I certainly hope not. I really don't think we're going to hit that target, although stranger things have happened. It's a valid signal, and it's starting to follow through now. And if you look at the daily chart, I'll just expand the daily chart out here. The daily chart of the Canadian dollar, is firing some fresh signals here too. You have this Darvish squeeze coming into play here, and you can see where it broke out. It kind of came back and touched the breakout point here. Let me just zoom in a little bit. Okay, so it came back down and retested this breakout point here. You can see that, and then it reversed to the high side. So you've got everything looking positive here on the daily chart as well. This held the zero line, and it's rolling to the high side. It crossed over as well. This is positive. Everything looks positive. Am I expecting a lot of upside? I'm not expecting a lot of upside unless we get some real weakness in the US dollar. Do I think it will hit, like, let's say $1.259? We're at $1.0184. Yeah, we'll probably get another 100 ticks to the upside. I wouldn't be surprised to see that. I wouldn't be surprised to see this level come into play. That would bring us, on a 1-to-1 out this way. But I would not really want to kind of prognosticate where I think it's going to go beyond that level. Okay, taking a look at the Japanese yen now. I've been kind of bearish on the Japanese yen up until, I wasn't interested in this level shorting it because I thought it might go higher. We're still below this potential short level, but to be honest with you, I'm not really interested in the shorts anymore. It's just really, it looks to me like if I look at this, unless it shows some real weakness, like for example, well, let's have a look at it. So you've got resistance here around the 21 EMA on the weekly chart and the $25.33 level, which is about a 50% retracement from this high to this low, which was the major move, okay? So now you've got roughly a 50% retracement. The expectation would be a rollover here and for it to push lower. So now you have this kind of U pattern forming on the daily chart, right? You've got this U pattern forming on the daily chart, and everything's starting to look, like even though you're testing this zero line here and you could roll back over, everything's is starting to look fairly constructive on the daily chart now because, you're above the 21 EMA. You could get a potential breakout of this level. I don't really like it anymore. I think what I'd really need to see is it smack into one of these levels and then fail and give a really clear signal that it wants to push lower in order to short it. At this point in time, it's looking really mixed to me. This looks like it wants to roll to the high side. This is potential resistance or it could be support. So this is kind of like in no man's land now. I really don't know what to do with it at this point in time. It's right at the level that I was interested in looking at shorts, but I don't really like the price action. I don't really like how it's hanging up here. These weekly closes, close to the highs here. What you really want to see is it kind of come into that level, right? Into that level pretty hard and then show weakness and come off that level. You're not really getting that. You're just getting kind of, look at how this day closed on Friday, right close to the highs. You really need to see weakness in order to confirm it rolling lower. Like what I'd want to see at this point in time is maybe a squeeze come into play, right? A squeeze come into play, hold this zero line, and then it break this level and fire a Darvish squeeze short to the downside. Or I would like to see it, this is more of a momentum setup, or I would like to see it, the price action roll back over and the moving averages roll back over and it do one of these and then go lower, okay? As long as there's enough room in there to retest the lows. So that's what I'd more like to see in order to actually get short this move. I wouldn't really want to get shorted on strength. I'd want it to take me in on weakness. That's really what I would like to see in order to get short this move. You'd want to see, you'd want to see these kind of go red, the Hakanashis go red, this start to roll over, and one of these situations, to come into play, or the Darvish squeeze to come into play here and fire a valid short signal below this resistance level, okay? So At this point in time, long story short, not really interested in the Japanese yen unless I saw one of those things happen. Okay, let's have a look at the at some of the metals. Now, the metals were looking short. They were looking sell side, and if you look at really what's happening here is you had this downtrend line on the daily chart. You had, you're holding. See, here's a couple of key things here. You're negative here on the weekly chart on the Hakanashis. The squeeze isn't telling you really that much, except the momentum's starting to push higher. The MACD is actually right at the support line. It's right at its zero line. So this could be considered support from an indicator basis on the MACD. The momentum is really, the momentum of the trend is really at the zero line. That's not really telling you much. So now you've got this huge Darvas box on the weekly chart, and the price action is telling you, hey, even though everything looks negative here, I'm not really going lower. So at this point in time, even though the indicators, like the 8 is below the 21, red Hakanashis, this is at support, the price action's really not going any lower. And in fact, if you look at the daily chart, let's just expand out the daily chart. What I'm seeing now in the daily chart is you've got this kind of intermediate trend line in play, and you're starting to push up above it a little bit. And what I'm actually looking for to see is these signals here didn't really follow through. Okay, these signals didn't really follow through. And I think if we got a second break of these levels here with a second follow through, I would have been interested potentially in the short side there. And I think that's what I've been saying in the videos. But if you see that, look at the price action. It's not really following through. It's just holding support. I've been watching it intraday from time to time, and it seems to really like, the 1640, 1644 level a lot. It always seems to come back and revisit that. Now we're 20 points higher from that. We closed 20 points higher on the day from that, and I think we closed around 1664, and we're starting to push through this downtrend line. We're in a squeeze now, and we're blue Hakanashis here. It looks like we're finding support here, and we want to push higher in the MACD. This is still negative. I mean, we're really mixed here on the daily chart. But what this is, I believe this is, I've looked at it in another analysis. This is about a 50% retracement of the major low from down there to the high up here. I think that's what it is. I'm not going to analyze it in detail, but I can say that these lows are kind of holding. It doesn't look like it wants to go lower at this point in time, and in fact it looks like it might want to fire a Darvas squeeze reversal. So I would be looking for the upside surprise, because the market just doesn't seem to want to go lower. So what I'd be looking at now is of course I'd be looking at a break of either one of those levels really, but what I think would catch most people flat-footed and would catch most people off guard would be a break above these highs here. So a break above those highs, anybody who's short would probably logically have their stops above these highs. So what I would expect to have happen is if we probe above there, we're probably going to explode to the high side above these highs. So those highs are coming in above about 680, somewhere around 1680, sorry. So unless we get another clean break of this level, this area, make no mistake, this area in my mind is inactionable. This is the dead zone. So what I'm looking to see happen is, if the price isn't going lower here, it's probably going to go higher or sideways. So the upside surprise would be here. Okay, and I'm always cognizant of where the potential upside surprise in a market is, because, let's face it, most people are wrong overall in trading. Otherwise, everybody would be making money doing it. So where most people, I think a lot of people are bearish on the metals right now. They think that the metals are going lower, and because they're not actually going lower, I think the upside surprise would be, this situation here where they break above the key resistance, and blow out all the shorts, and that would add fuel to the fire to push higher. So that's really what I'm going to be looking at this point in time. I'm going to treat this entire range, this huge range from 1620 now to 1680. It's a 60-point range. I mean, that's a pretty huge range in gold. But I'm going to be treating that as the dead zone and look for confirmation or direction outside of the Darvas box to the high side or the low side. Okay, let's just take a look at the silver to round out some of the metals here. We'll look at the gold and the silver. Now, I see another kind of trend line kind of coming into play here. I'm not going to look at the weekly chart so much, except to point out that you can see this last week here. This looks like accumulation where it closed pretty well off of its lows. That's potential accumulation coming into play there. It is into resistance. But at this point in time, this is kind of a red flag to the short side. The MACD looks like it wants to roll lower at this point in time. So you've got some kind of conflicting things between, some of the price action and some of what the indicators are telling us. I think what's more telling is the daily chart. So let's have a look at the daily chart. Let's take a look at the these potential price highs. I see another trend line coming into play here, and I'm just going to draw it. An intermediate trend line. Where are you, trend line? From these highs, we can connect a couple of these points. And let me just change this to red. So I don't think it would be unusual. To get a test of this trend line here. The silver is the same situation. It's fired off one signal here. It probed lower. This level here at the 61.8% retracement at 30.54, probed below it, and now it's holding that level and it's pushing higher. So silver doesn't want to seem to give up the ghost on the downside. And in fact, what you're actually getting is, I wouldn't be surprised to see a push into this 21 EMA that lines up with this trend line around the 3160 level. We closed at 3141, I believe, in the silver. So a push back into this level wouldn't be unusual. The question is it going to hold that level, or is it going to find resistance at that level and come back down and stair step down, down to this trend line that lines up with this kind of Darvas squeeze short target? You're not really getting a lot of clean follow through in this market. It's very slow. It's very grindy, and it just, even though it may do this situation, I'm not really interested on it in the short side at this point in time unless it really gets something going. Silver and gold are usually more momentum markets, and you want to really see some kind of momentum in a momentum market. Now, just looking at this, I see a bit of a divergence here on the momentum in the squeeze. You can see, you've got this low here, and then you've got this lower low, right? This lower low, but the squeeze momentum is actually going higher, at this point. Okay, so actually this point here. So that's a bit of a red flag. That's a bit of a divergence. The MACD looks a little bit overdone, and it looks like it may want to, at least come back up and test the zero line. So at this point in time, I'm a cautious short. Did I say that right? I am a cautious short in the metals, and I'm looking for the potential upside surprise, just because it doesn't seem like at this point in time we want to push lower. So at this juncture, I'm looking at that level for a potential failure, recognizing that we may get a potential either slow action or a potential reversal when I look at the gold. So at this point in time, I'd probably leave it alone and just look for further direction. But that's kind of what those are kind of my thoughts on these markets right now. They're not very clean. Okay, I'm going to take a quick look at the natural gas. In terms of the natural gas, I'm going to look at the UNG because I don't have data for the natural gas futures. So I'm just going to use the UNG as a sloppy proxy, I guess, for natural gas. One of our members here at the Market Trading Concepts floor, he trades natural gas, and so we've been looking at it quite a bit, so I figured I'd cover it. So this is for you, John. So I'm looking at the natural gas, and actually, John had a really nice trade here. I apologize, John, if you don't want me to talk about this, so I won't get into details. But John had a nice trade here where he identified resistance in here and resistance in here, and he did a short trade on the natural gas, and that worked out really well. Now, at this point in time, we're not really that interested in natural gas, though, because we've had a bit of a divergence going back quite a bit, where we had in one of our other charts where we were looking at, this is really overdone. This is really overdone, and we were losing momentum in one of our other indicators. It's not on this exact chart, but we had a bit of a technical divergence. The other thing we're looking at here is, if you look at now, you've got some blue Hakanashi. So at a minimum, you'd want to see at least a red Hakanashi come back into play on the daily chart in order to get interested in the short side, and preferably two. Let me just draw these in red. So you'd want to see a situation come in where you get two red Hakanashis on the daily chart come into play to see if it's going to fail this level. So right now, though, what you have happening is it looks like it's starting to build up some support, unless you get it kind of breaking some of these levels and retesting these, and if it breaks these levels, then it looks like it might retest those lows. But at this point in time, it just seems to want to potentially push higher. So what the concern is because it's so overdone that it might actually come back up here, and even push through here and get more of a retracement into some of the more, key resistance levels. It hasn't tested the 21 EMA on the weekly chart, in a long time. And at this point in time, you really need to see it break some of these levels, and then you've got quite a bit of air back down into, to retest these lows. Until that happens, I wouldn't really be interested in shorting these markets personally, and I'd actually be looking for the upside surprise, just because I've seen some technical divergences in other areas that we're looking at. If you look at it here, you've got the MACD in the bottom of its kind of oscillator range, and you've got it crossing, this crossover to the high side. Wouldn't be unusual for it to come up closer to these levels. You've got a lot of volume coming in here, but that volume was probably because of the, I think this was contract rollover for the natural gas. In the futures market, there was a contract rollover there, and there was news that came out on this day too, which probably caused this, this extension higher. At the time, we were looking at, the artificial demand created because people were rolling out of the contract, and they had to buy, buy back contracts to get out of probably of their short position. So there was, that synthetic demand that the guys were talking about here at the trading floor. They were talking about the synthetic demand to to close out those contracts, which would explain the increase in volume. And then you also had the news coming out where it looked like they pushed the market up into the news only to take it right back down, which isn't uncommon for news. It's it's really an opportunity for them to pick traders' pockets. Unfortunately, it's great if you're on the right side of that, right? So just looking at this, though, in a nutshell, I'm actually looking at. I'd want to see a break of some of these levels here in order to get interested on the short side again. Like to see at least one red Hakanashi come into play. Preferably two, to see if we're going to, retest the lows and potentially go lower. But at this point in time, I'm looking at the weekly chart of the MACD. This looks overdone. It looks like a crossover could happen in terms of, it's really overdone to the downside of its oscillator range on both the daily and the weekly. I noted some technical divergences in other markets or in other analysis of this using some different indicators. So I really don't like the short side at this point in time. Some things would have to happen. I'm actually looking to see if this is going to kind of explode to the high side and and basically, you've got the obvious resistance here. If it breaks above this level, we could get an extension, to the high side, which would catch a lot of people that have been short for a long time on the wrong side of the market. It'd catch them flat-footed, and we'd get a bit of an overextension to the high side, kind of stop run blow off. So that's kind of what I'm looking at in terms of this area. So this is basically the inaction zone, and I'd be looking for a break of this level to look at the short side, and I'd be looking at a break of this level to see if we're going to get a stop run. So that's basically where we're at. Okay, I'm going to round this video out. We're at an hour and 15 minutes. I apologize. I really need to keep these shorter, but they are, as I've mentioned before, good opportunities to learn, and they are good opportunities for me to just kind of quietly sit and do some research. So I'm looking at an hour and 15-minute video. I'm still not tired of talking, so I'm going to keep going for a bit longer, and look at the grains here. We have some crazy volatility in the corn. I'm not sure what's driving this, but I really don't like, I don't really like the chart pattern. I really have nothing, like I couldn't really do anything with that unless looking at it on intraday charts and trying to catch, these moves intraday, and maybe day trade that to the high side. You've really got a lot of mixed action coming in here, where now you've got a blue Hakanashi. You're stuck in this huge range. You've got surprisingly low volume on that move, which doesn't really make sense. MACD's rolling higher, trend is lower. So not really much to do with that. Like as I said, you can take 60, intraday signals. Here was a nice 60-minute Darvish squeeze long, where you had, this was looking to cross over, this had crossed over. Here's your Darvish squeeze with your blue Hakanashis coming in, and then boom, you hit your targets easily. You easily hit your targets. So those are kind of some of the signals that you can look on an intraday basis to see, these are very tradable moves, and you're looking at, move from 591 to 595. That's almost 596. So that's, 5 points, $50 a point. That's a $250 move there per contract, roughly. And then, if you had the cojones to stay in it through this kind of a move, that's a whole other story altogether. That's a pretty huge move. But from a swing trading basis, I really don't have much. You're just stuck in this huge sloppy range on the weekly chart. Red Hakanashi, squeeze coming into play. This looks like it's below the zero line, looks like it wants to roll lower. There's just really not much to do here on a swing trading basis. That's negative. You really need direction outside of that Darvish box on a swing trading basis to be actionable. And you need some trendiness to take place. Like, you need to see these markets start trending like we saw in the soybeans. Let's actually just jump right over to the soybeans now. I'm not even going to pause the screen. And you can see that the soybeans have been in a very nice, orderly daily uptrend, where you can just look for the pullback opportunities in this market to get long. Now, I personally don't swing trade. I don't swing trade the grain futures, but this is what you kind of want to see. Now, I'm actually really quite surprised here. This has stayed overbought for a long time. The MACD has stayed overbought for a long time, and that's something that you would expect in a strong trending market. Now, if you look at the Hakanashis, one of the things that you can notice is if you're long this market, you can stay long this market until you see some real weakness come into play. You had two red Hakanashis come into play here. This would have been kind of an exit sign. If you were able to hold on to this trend, I would have personally exited here. Okay. Now, even though I said that and I identified some major resistance in last week's video, the price has said, you know what, Dave, we don't really care. We want to go higher. So, and you can see it, the Hakanashis are back to blue, and The trend is still intact, and everything looks good to the high side, in terms of the trend still being intact. At this point in time, until proven otherwise, pullbacks to the 21 EMA are still in play, with fairly, I would say, fairly tight stops. So if you were to buy this pullback, I would probably at most have a stop below this Darvis box here, if I were going to trade that. But if you look at the, let's take a look at the weekly chart, because the weekly chart was a little bit more telling where the major resistance was. And I was saying in last week's video that I thought that this resistance would hold and that the grains would move higher. I was definitely wrong there. If you look at, we had this resistance level that we were kind of fighting to get through. We pushed through that. We came up to this next resistance level, and we're just slightly above that next resistance level. Okay, and this is a fairly long-term resistance level. So the question is, now we're not cleanly, on a weekly basis, we're not cleanly through that resistance. As you can see, we're probably, I wouldn't say that we're through that resistance in terms of like we've broken that resistance. We've probed above that resistance, and I'm just going to draw a line here right about there. You can see that we've kind of probed above it, but we're not cleanly through it, okay? And by cleanly through it, I mean that we haven't like traded above it, retested it, and moving higher. Now, if you look at this weekly chart, I would not really want to get long here, no matter how good the price action is. As far as I'm concerned, this is still a resistance, okay? This is still resistance, and we're really extended here. We're really, really extended here, and at any point in time, we could pull back, to this level here, 1410. At a minimum 1410. That's 80 full points, and the soybeans lower. Okay, that's 80 full points lower. So the market looks great. You've got this huge cup pattern here taking place. And the market looks great, but I would at least, at least like to see it kind of, pull back, form a handle, even if, if you believe in the cup and handle type situation, where then you get a fresh signal to get back long. But I think a pullback is in order, and anything can happen in these markets. I could be wrong, but I really like the trend, but I think we're really extended. To make a long story short, I would expect a pullback at any point in time. I could not in good conscience get long, right at the high of this move into resistance. Could I get long back down here? Sure. With appropriate stops. And appropriate entry techniques too. I would wait for a pullback into that level, and then I would drill down to a lower time frame chart, and I'd want to see a trigger or see some, I'd want to buy it back on the way out of the resistance area. I wouldn't want to just, buy it as it's slamming into that area. I would want to kind of do this. Here's the level, and I'd want to catch it back on as it's proceeding to move higher. So I hope that makes sense. Okay, let's finally wrap this video up. It looks like this video is going to be about an hour and a half. So let's have a look at the wheat. I refreshed this chart here. Because it looked like I was getting some stale signals here, so I just refreshed it. And if we look at the weekly of wheat, we obviously closed all of the grains very strongly on Friday, and we had this short squeeze, Darvis squeeze short on the weekly chart that looked like it didn't really follow through here. You got a little bit of downside, and now you're right back up into resistance. So last week I had the grains pegged as at resistance on the soybeans and the other markets wanting to go lower. At this point in time, these signals have not followed through, and you've got some you have some indications now. It's not unusual to do one of these, right, and then maybe do this. But at this point in time, unless it breaks these levels again, then this is really not in place. So this is not an actual zone. Now you're above this Darvis box here on the daily chart. these are really sloppy charts. I mean, you had this short signal, you had a confluence of short signals from the daily and the weekly perspective in wheat. But you can just see that they're just not following through. So there's nothing you can really do about that except wait for, next steps. Now you have on the daily chart here, the MACD's rolling higher. Is it going to, it's below the zero line, so is it going to, resolve itself ultimately to the downside? I don't know. It's still a possibility, but at this point in time, it's a little bit too far away from those kind of moves in order for me to say, yeah, it looks like they're going to follow through. So at this point in time, I really have nothing. I have nothing on these markets until, further confirmation. So these potential shorts could still be in play, but we need to see the market come all the way back down and break some of those levels and then, ultimately follow through. This squeeze has been in play a long time. So, for that many days. So could we get a reversal here? Yeah, absolutely. Absolutely. We could just be stuck in this range for quite a while. It's hard to say. So that's all I have for this week. I'm actually one of our members that just joined. His name is Jason, good guy. He just joined our live trading room. It's good to have him. He likes to trade some of the grains, the soybeans. So we've been learning quite a bit from him and how he approaches the market, the kind of stuff that he looks for. So we'll be learning a lot more about intraday trading the soybean market. And I think he trades the soybeans. I don't think he trades the corn or the wheat, but he definitely trades the soybeans. So it'll be interesting to learn a lot more from Jason. And that's kind of why we've come together here in the trading room at Market Trading Concepts in order to learn from each other. Different people are going to trade different markets. They're going to have different takes on the markets. So I want to welcome both him, Jason, John, and Joe, who will be back next week to the live trading facility. And I kind of joke with those guys that I'm going to need to change my name to instead of Dave to Jave. Because everyone's first name starts with a J. So it's good to have all the guys here. They all trade different markets. We're all learning from each other. We're all learning about the different markets and how each of us approaches those markets. So going forward, I hope to incorporate some of their analysis into my weekly videos, if that's okay with them. And I'm looking forward to personally learning a lot more from these guys. They're all smart guys. They all have a lot of experience, not only in trading but in some of the other aspects of their life. So it's been a good overall experience. Good learning, good camaraderie, good stuff all together, all around. So looking forward to moving forward and looking forward to seeing all of you that can make it at the meetup tomorrow. So good trading, and we'll either see you tomorrow or we'll see you at the next video. Take care.